Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and we're going to take a look at our strategy webinar of today in just a second. First of all, though, we have two disclaimers we need to discuss. The first thing is the fact that this is shown to a global audience, but may not be suitable for everyone. Please take a look at this disclaimer at the website also, where you can find more information is admiralmarketsglobal.com. Select your country of residence and contact the appropriate entity to find out if it is suitable for you and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, today we're going to take a look at strategy. Typically, we look at four phases when approaching trading. First of all, defining the trend and momentum. So we're looking at the flow, what direction is interesting to trade, or first of all, is it interesting at all? Maybe we conclude that a certain pair is better to set aside. Secondly, what is the opportunity within that trend? We look at Fibonacci and patterns. Thirdly, is there anything that could block a trade from materializing? Fourthly, what is the reward to risk? If I do take a trade, where do I want to trade it and how do I want to trade it? All right, that's the trigger. How and where is the decision zone? And then the reward to risk is the ratio between stop loss and take profit zone. All right, so those are the steps we usually take. We're going to basically analyze the market today with the Keltner indicator. And that will be our main tool for these four steps, but we'll also most likely tie some other things into the mix. First of all, though, what kind of news events do we have today? Well, we don't have much European news again, but there is some dollar news, and a big one, in fact, later on. FOMC meeting minutes are expected, and then we'll have to see what kind of direction the U.S. economy is expected to go to or is heading towards, according to the Central Bank of the U.S. All right. Thanks for your attention on that. Let's get started. Your dollar made continuation yesterday. Basically, the breakout is expected on Monday. Yesterday, I said that this is a good, strong candle. Expect follow through to 113.20 or 114. And it didn't get to 114, but it did get to 113.20 just by one pip, 113.21 to be precise, or 22. So that did happen. And yesterday we were talking about on a 5-minute chart that we need to get a correction, because the thing is that when you have a breakout like this, right, this strong, and you try to trade it somewhere in here, it's a bit risky. Although in this case, actually, the retracement was quite light here before it followed through. I thought there would be a bigger correction because 112.50 is quite a decent resistance level, I thought, but it didn't prove true. It actually still continued. But all in all, I did say, or we were looking at the upside break on Monday and the continuation in the New York session. If there was a good 4-hour candle, that did happen. Here we got a bigger consolidation. That's kind of the correction I'm looking for, where the oscillator gets back to the zero line or close to it. So that was, for me, the correction that was what I was looking for. And indeed, we got the follow through for another 60-ish, 50 pips to the next target before we got into a bigger correction. Price respected that level, went down to 112.50, used that, and now it's going back and forth. So that was yesterday. So some good trades to the upside. Couple of good trade potentials there to the upside on the euro dollar this week. Now let's take a look. Now, using the Keltner in general, I think is always a good tool to have. It basically indicates support or resistance, and the middle line could even be used as trend. The cool thing about Keltner is that you can use it basically in combination with candlesticks to understand, is there going to be a breakout or is there going to be a mean reversal setup, basically. So there's a lot of value in the Keltner. It kind of gives a good, it's valuable, basically, not only in trending situations, but also in reversal situations. So that's, indicators are not often that multifunctional. A fib, for instance, is good for pullback, so it could be. I use it also for targets, but that's my own custom adjustment. So yeah, it's in any case, you get my point. It's quite useful to have an indicator that can be used in multiple ways, and Keltner is certainly so. So today I want to focus a bit on how to use it, analyze it, and trade it. So if we look at the euro dollar, we can start off with the monthly, and you can see here, for instance, very clearly, price with the close near the low below the Keltner. That was the indication that this is not just a down move, this is going to be a breakout. And sure, we did get a great bearish impulse, in fact. All right. So at this point, we are showing some consolidation, and you can see price reach the middle line. Still overall in a downtrend, considering the angle of the Keltner. This is a consolidation going sideways within that band at this moment. All right, weekly, you can see a couple of times almost hitting very, very close. And indeed, once it hit the upper end of the Keltner, it was a resistance. Here, though, it wasn't support. That's because the candles were below the Keltner. That's a substantial difference. And the angle was down. So actually, the lower was kind of the lower band acted as a indication of a continuation, in fact. Right? So that's the difference. Candles here clearly closing below and staying below. Here, heading towards a flat Keltner and basically showing a candlestick pattern. So, ways to trade it would be to trade the bearish candle, for instance, here, looking for retracement, or just taking the candle itself, depending on how big the candle is. This is quite big. Retracement makes sense. This is quite small. Retracement is less likely. So that's how you can use the Keltner for bounce trades. And here you could, of course, look for breakout continuations. On a daily chart, we see that price here, for instance, great signal. Even here, a lot of struggle, for instance. So those are just two examples. Here at this moment, we can see that price is actually approaching the Keltner again, and it is in a potential reversal spot. But yesterday did close bullish. There's a bit of wick at the top. So it didn't close above the Keltner, nor did it close near the high. There is some wick. So at this moment, I wouldn't trade it either way at this point. With Keltner in mind, I don't think it's a bearish nor a bullish setup. So it seems to be a neutral, wouldn't trade it at this point, right? But the 4-hour chart, or 1-hour chart, I should say, 4-hour chart had a setup here on this candle as it broke out and indeed got the follow through. And the hourly had one here and here and here, upside trades, right? So got the good momentum to the upside, and it seems to be making a correction lower at this point. So from this point of view, I don't think that there's any particular trade at this moment to be taken on the euro dollar. The only thing I might consider if euro dollar struggles on an hourly chart at the bottom of this Keltner, I think it would make sense to trade it to the upside. And why? Because this is still a breakout. This could easily be an ABC correction, for instance, a bull flag correction. The daily chart is still showing a strong bullish candle. So what could happen is just a correction like this, and we might make one more higher high to the next target of 114. So with that in mind, I think the only thing at this moment that would make sense is basically on the hourly, try to see if it can bounce off the bottom of the Keltner. If there is a bullish candlestick pattern after touching the bottom here, that could indicate a correction. That could be a bounce at support, and we can get one more push up to break this top and 114. Of course, if we get candle closes below the Keltner like this, then the bullish bounce seems less likely, and could still happen, but that would kind of put the trade idea on halt. Let me say it this way. So what I'm specifically looking for would be a wick, a lack of a bearish candle, basically, It could be 2 wicks, it could be a pin bar, some kind of candlestick formation in here that shows weakness to the downside. And it doesn't have to be exactly here. And what can happen, of course, is that price pushes lower and closes here. Then another candle pushes lower and closes here. Then the next candle is slightly bullish like this. So it kind of turns slowly like that. All right, that's possible. Something like that is fine. That's what I'm looking for, basically. The formation, the turn could happen in various ways. So, take a look at candlestick webinars, basically, to get a better idea about that. But for instance, here, right, you got a strong candle, but then you get 3 candles that show indecision right there, something like that. All right. PalmUSD made a stronger upside than expected, and therefore, at this point, I am bullish at this moment. All right, this is a strong momentum, in fact, and because of that momentum, we didn't get the break. Of course, also, basically, anyone who took shorts in here probably took a loss, but maybe was able to exit because it definitely had a lot of wicks here. So you want to use that to reduce the risk. That would have been logical. I mean, if you see all these bearish candles at this resistance, it either bounces or it doesn't. You don't want to stay in there forever, right? You want to keep your trading plan flexible, as I was talking about yesterday. It didn't break to the downside. It broke higher, which means that we're now in a neutral zone, actually, as I said yesterday. But considering the speed that it actually moved to the upside, I think that this could be a bigger ABC zigzag to the upside. In my wave analysis, already said that this is probably A, and now we're going down for B. And indeed, that seems so. We got 1, 2, 3, 4, 5, 6, 7 candles not breaking this top. So indeed, this momentum, this swing high, swing lows seemed over to me when I made my analysis. And I think that is, you're seeing the start of that right now. So I'm expecting price to go back down here and then bounce off a fib for upside. So this channel is broken, even this channel resistance is broken, this top is broken, and you can see that why I think that this could be an ABC zigzag. All right, let me put this fib here. You can see price stopped at the 38.2 fib of this entire move down. All right, so I'll keep that fib on, but I also add one fib, which is this. Like that. Oh. All right, and I would expect to bounce at the 61.8. The golden ratio up to the minus 61.8 target. And you see confluence between the retracement and the targets. You see that 50 and 272 are target aligned, 61.8 golden ratio and the minus 61.8 target aligned there. That's basically what I'm expecting is price to drop here, bounce, hit the target, make a bull flag, go up to the target, then probably turn back down again. So this is just based on these few tools, I think the path of least resistance right now, right here, which means that at this very moment, shorts, despite the bullish momentum, are in fact more interesting than longs, in my view. Longs do become interesting once price makes the retracement back lower. Then I would be interested in reversals back to the upside. And in fact, if you look at the Keltner, what do we see? We see a lack of any 4-hour candle closing above this Keltner. We see a doji and a bearish candle. So just based on that, this could be a short. If anyone managed to get it a bit higher like that, probably obviously a bit better than right now, but difference is small. Target 61.8, stop loss above the top, and let's see if this works out. Safer typically a safer way to trade a reversal is if you get two bearish candles in a row. But then you could be unlucky, and the second bearish candle could all the way be here. Especially in this case, that could be too late, because if I'm expecting a bullish zigzag, then this fib is the target, and if the bearish candle goes all the way down here, there's not much space left before we hit the target. Let me open the chat box and see if there are any questions. Let's see. Didn't have it open. Good morning, Evaldo. Good morning, Janos. And Ejils is asking how the Keltner differs from Bollinger Band. Why don't we add it, and we can see right away the difference. All right. Let me make the color difference. Perhaps it had a more apparent. Let's go with, I don't know. Hang on. All right. So let's take a look. All right. So Bollinger typically, as you can see here, makes bigger curves in a way. It's kind of like when momentum picks up, it expands more drastically, and it contracts more with contractions, with consolidations. So Keltner is a bit, let's say, a bit more less expansion oriented. Bollinger Band will be contracting, boom, expanding, contracting, expanding. Keltner is kind of a bit more, flows a bit more, keeps its relatively same distances. So, which I think makes it a bit more valuable in determining breakouts, but also reversals, because when it gets to the Keltner in a consolidation, it's a bit more rare than the Bollinger Band. Also, for the breakout to reach the Keltner is a bit easier than a Bollinger Band. So I think it gives, when you look at this, a bit more info to us quicker, both in breakouts and in consolidations. At times, though, we can see that the levels are roughly the same, indeed. But at other times, we can see that there is a difference, as I just said. All right, so let's see how this trade goes. From the downside perspective, you can see here, candle struggling at the top of the Keltner as well. The 4-hour remains the most important. So there's about 80 pips from the moment we talked about it versus about a 50-ish risk. All right, other than that, I don't think I have much to add on the Keltner, here on the pound at least. Oh yeah, and look at this bullish candle, by the way. That's engulfing twins near this bottom, and that could be potentially double bottom, right, or close to double bottom. Definitely a towering candle, and with that in mind, I definitely think that any shorts have to be very, very cautious of these fibs. Not only the 61.8, you want to be even aware and careful that higher fibs could be a turning spot. Got to be careful. This is a risky, especially when you look at this strong bullish candle. That's a pretty significant candle. So yeah, from that point of view, bigger upside I would expect. All right, dollar yen. This is not a great breakout candle. We talked about the fact that this is a potential breakout candle. If it has a strong close, boy, that could really usher in a lot of momentum, but we don't have a strong close. Yesterday, same like the euro dollar, was looking at a 5-minute retracement. If the breakout was not traded, talked about the breakout potential on Monday too, and it did break. right in here. All right, there's the break. And we're looking for 5-minute pullback, well, or 50-minute pullback. Well, we got small pullbacks here. Those aren't interesting. I was looking for a tad bigger one like that. And there we go. That's basically the correction. If you add a awesome oscillator, excuse me, you can see it reaches the zero line here, also here even actually, it was very close. So both pullbacks made sense. In fact, well, this was before the webinar. Okay, so this pullback made sense. Basically a bear flag. Let me show you, like that. Classic. All right, break of the bear flag, boom, we got another 50, 60 or so pips to the downside, and that was a great move. So that was a trade. We talked about Monday, Tuesday again, breakout here, breakout here. Now at this point though, I was also saying today could be another short if we get a good breakout candle. We didn't though. So at this moment, no breakout to the downside. And in fact, if this is bullish today, that could actually indicate a reversal. If we get a bullish close above the trend line, above yesterday's high, like this, I think it's actually more like a bounce off of double bottom, and price could retest the resistance up in here, around 104. All right, so yesterday looked bearish, was bearish yesterday, but didn't close bearish. So at this moment, I'm not looking for follow through. If today also, by the way, would end up bearish like this, that would be a good breakout, and then it still could be tradable as a bearish breakout with the stop loss above here. Maybe get a bit of retracement tomorrow, and there could be follow through on that. So here too, on the daily chart, we're an interesting spot on the Keltner. 4-hour chart did have a good breakout candle here, and we did get follow through. But then price bouncing off support. The dollar yen is on the hourly chart is looking to struggle a bit here. I don't think it's convincing enough combination maybe to short, but there, you could see why this could be an interesting position here due to the fact that there's a wick, a bearish candle, and resistance above, which could lead into basically a correction lower. If we put a fib from here to here, you see that also the target has been hit. So, but from this point of view, I think it's the same like the pound. I think that considering the momentum up, there is probably at this point a substantial argument to be made of a bigger zigzag. So any shorts in here, I think will find support down in here. So the space seems to be a bit small to me. It's probably the same as the pound. Maybe it is a bit smaller actually. So yeah, it's possible too. But I'm not a big fan of it just because of that daily candle, as I just said. There is a small trade maybe here to be found, but maybe if it makes rather a bit of a hook back here, shows a higher low, sorry, lower high, that could be still a reversal trade worth trading maybe. So I'll leave it on the 50-minute chart. All right, pound yen, same story. No breakout candle, actually, no continuation candle, I should say. Actually, it's a pin bar. Price is moving up. Euro yen, wick 2, just going sideways. Aussie, a wick. That could be a bounce off the Keltner top, just like we had here. As we had here. Here we we're riding above it, so I wouldn't count these. These are closes above it. Here too, but here it's bearish. Here it's bearish. This is bearish. This one is bearish. This one not yet. This one is bearish. So here we have some wicks. We have some bearish candles. 1, 2, 3, 4, 5, fifth candle. I think the Aussie is starting to look like a bearish pattern. It was already bearish pattern. I was already talking about the rising wedge here on Monday, but didn't want to trade it either way because it was still pushing up. I think that the push up now is really running out of steam after yesterday's wick. And from this point of view, I think a reversal trade might make sense. Now, the problem with such a reversal trade is that it's halfway the rising wedge. It's not a really fantastic spot maybe at this point. I know it's about details here, but if it was, yeah, if we were having this webinar and the price was about here, it could make a bit more sense. The 4-hour chart was better, right? Look at this wick at the Keltner. Taking it right there would have been a better one with stop loss above it, aiming for the bottom here. That would have been a good reversal trade on the 4-hour chart. Double top, wick, Keltner, trend line. Now it's not that great, but of course it doesn't have to respect the support. It could stop at it and then break through it, and there could be a bigger correction after it breaks this rising wedge. It could break, of course, the rising wedge, which it actually should. If it is a rising wedge, it actually should break to the downside eventually. But rising wedges are difficult to trade because the thing is they can bounce here and make one more higher high before they break. Not my favorite type of pattern. So yes, the reversal seems likely, but if is it the best spot to trade now? I don't know. I have some doubts. I think 4-hour chart was definitely a good setup up in here, but let's see. Hourly chart, we don't see any good break as yet. They've got wicks here at the bottom of the Keltner. So if there's a good hourly breakout candle, maybe that could be an hourly breakout. Try to ride some momentum here of that. You see if you get a good candle like this, entry maybe small retracement, stop loss above the momentum candle, and try to take 50, 60 pips to the next support, which probably is a bouncing spot. So in that way, you're not trading the bounce, but kind of the breakout continuation. And here too, on the hourly chart, you see pretty good candles. Now, on the hourly chart, you want to be careful because look, here you got a bearish candle, here you got a bearish candle. Only the third one did it finally turn. So sometimes you're going to have those moments where it takes a while before it actually turns. From that point of view, sometimes using a 2-candle rule is good. But the disadvantage is that sometimes price has moved away quite substantially, like in this case, but still quite a fall left, in fact. All right, so if you use 2 candles, 2 bearish candles or 2 bullish candles in a row, there's a bit more confirmation that a turnaround is happening. All right, Kiwi didn't really hit any of these Keltners, but yeah, it's the same thing. It's at resistance right now, looking like a rising wedge. Same thing, but not at the Keltner. Dollar CAD basically showing that it's back at support here. So that could be a bouncing spot within this channel as well, as we can see. All right, but this is not enough. The wick is too small. Not enough to trade up or down from a daily perspective. I would like to see what this candle will be. This could it could be a correction zigzag, but it could also be the start of the breakout if today's candle or tomorrow, for instance, shows a good close below it. Well, your pound, that's a strong candle. But as we know, one candle within a momentum break is not enough. This could just be retracement still. If today is bearish, then a retracement is likely, at least. You're odd. We got the upside, as indicated yesterday, that either price will make the breakout or a deeper retracement, but both should be indicating a bullish continuation. That happened yesterday, turned out bullish indeed. Look at the candle, and there was some good trading to the upside, as discussed yesterday. Basically, let's see. Basically, this consolidation zone got broken to the upside. At this point, I would expect more continuation to the upside. Daily chart is showing bullish candles, 4-hour bullish candles, and we're breaking above the Keltner. But there is one thing I don't like about it. We got divergence between the tops here. And I think it's kind of, I don't know, it seems like it's running out of steam. I think it's a bit late to trade right now. So I would probably not want to trade it now. What I prefer to see probably is price to make a retracement back to the zone, bottom of the Keltner. That's where I probably would prefer it, actually. All right, back to this zone here, right in here. Probably the top of the zone, to be honest, but stop loss could be below this bottom. That's where I would like to see bullish candles or struggle wicks, and I think that could be a good upside. All right. Pound out actually also showing a bullish candle here, so we got some retracements going on, I think, on these pairs. This is not tradable at this moment, I think. Well, I mean, in theory, of course, both pound, all these crosses look like they're going to make a retracement, considering these bullish candles here. So there could be a trade on the daily right here with a stop loss below the candle, aiming for the top. That's a pretty good reward to risk. It is a reversal trade, a mean reversal trade, so typically a bit more risky, but things are lining up for that, I would say. All right. We're looking at the Euro New Zealand and AUD New Zealand, but I don't think anything is interesting on those two pairs. And then, of course, there are a lot of crosses we can look at. Admiral Markets offers a whole wide range of currency pairs, stocks, and indices that are tradable, and you can find a whole list here. So you can also go to admiralmarkets.com and then click on products, and you'll get a lot of info about that, what is exactly traded. As you can see, Forex, not only Forex though, CFDs, bonds, commodities, indices, right? So whole range of options here. And Admiral Keltner, by the way, if you're interested in that and you like the indicator, you can test that out. Either if you have Admiral Markets account, you can go to platforms, click on MT4 Supreme Edition, and download that. And then once you've downloaded that, very simple, very fast, you have Keltner in your list. If you don't have it, you can actually open a demo, try it out for a month for free. It's always for free, by the way. Sorry, I'm not sure why I say it's for free, but you can, test it for a month. And if you have an account, of course, forever, as long as you keep that account. There's also MT4 Web Trader that you can test for when you're on the road, when you're on the move. Very useful. And if you're on the website, in the meantime, you can then might as well check out the analytics. We have a blog twice a week. We have calendars, analysis, my wave analysis, technical analysis, fundamental analysis at the beginning of the week, and of course, education with webinars. So a lot to discover here on the website. Among others, this Keltner, as you can see right now. So let's take a look maybe quickly at some of these commodities. I think oil was here yesterday, and yeah, there was a continuation breakout for another dollar, I would say, on oil. Looks like it's running out of steam, I would say now. Yesterday, not, obviously. Now it does look like it's... Cheers, Bob. Good to see you here. Now it does look like it's running out of steam. I would expect a reversal here, retracement on the on oil. How far can it go back down? Let's take a look at the 4-hour chart. There you go. I think that this is the fib we want to look at. Price could go easily to 23.6, for instance. I would expect a bounce there, probably, and then move down, kind of making a channel like this down to the 38.2 fib or the 50. Gold still in a triangle, silver still in a triangle. S&P very cautiously moving forward above the top. All right, that's a quick look at those. Does anyone have any questions on Keltner or setups? Setups I have in mind for myself, or wanted to take a look at any other currency pair or financial instrument? Just say so and mention the time frame, and we'll take a look at that. Okay, pound dollar seems to be moving nicely lower, so that's good, as expected. Let's see how that goes. Euro pound weekly, definitely. All right, that's a good breakout continuation. Here we had breakout candles. So from a weekly perspective, we're definitely in a good momentum to the upside. Now, if this week turns into a wick, that could be a first signal that it's kind of running out of steam here a bit. For the moment, though, weekly is bullish. All right, but it is in a vulnerable spot in the sense that if it runs out of steam, there could be a retracement or correction. For the moment, though, yeah, last week was bullish, so that's why we saw also a continuation. Now, we see on the daily chart already, as we already looked at, some first indication that as we break that for a higher high here, it's running out of steam. But one candle, I think, is quite shallow, is a bit, little for this particular moment, this particular spot. I would like to see, this could just be a retracement, I think, still. So from my perspective, I would expect still price to make some kind of consolidation like this. If it makes a triangle like that, it's probably still, set up well for one more upside. Potentially more, but one more I would say is probably doable. On the other hand, if it moves up today like this and then it gets beaten down again like that, all right, and then we see a bear flag, and today's candle is looking bearish. We've got two bearish candles in a row. It is actually starting to look more bearish, I would say, and there could be a bigger correction in that case. So as you can see, I think it's too soon to tell which one it will be. Definitely weekly is bullish, but daily is in a question mark still. And I think the day will give us more information on that. All right. So yeah, that's basically the Keltner. Very useful, I think, in understanding, the limits of price. When is it impulsive, and when is it not or bouncing? Where is it lacking an impulse? Moving averages are pretty cool too with this because moving averages are, always good in judging the direction, momentum, and stuff like that. But what they don't do is indicate where's the upper limit or the lower limit. What they do good is basically when you have price moving up like this, right, and you get a correction, they'll go back to the moving averages, right? So that's very useful. But they don't really help much about when price will turn here. They might help here, though, of course, right? So moving averages show one side, kind of, one support or resistance. Keltner have the ability to show both sides, support or resistance, and both types of trading in a way. So that's the cool thing about this indicator. So yeah, it's an easy indicator to test as well, and use for just go back in time like this and test, or if you like testing, it's always useful to test, by the way. Then nowadays the MetaTrader 4 Supreme Edition has a testing ability. Let's see. It is here you have the mini chart. Here you can split the charts into various parts. And there is a way to backtest nowadays a system like that. Let me try to find it. Trading simulator right there. All right, so that's cool. You can basically test the simulator and try out your strategy like that. All right, so instead of doing it manually, you can use a cool tool like that. That is also a new part of the Supreme or MT4 SE Supreme Edition. So that's very lucrative to or very interesting to try out. All right, but Keltner, I think very interesting indicator for your mixture of trades, but something you definitely want to test. You want to get a feeling for, like any indicator. You want to observe it and kind of get a better sense for it. All right, folks. Well, thank you so much for joining this strategy session. I don't see any questions. We looked at all the pairs, so we might do again a session in the near future. I would suggest try it. Write down your questions, and you can ask me next week or in the weeks following. I'm sure we'll have some point where we take a look at the Keltner again. If you want to join for future webinars, we got tonight. Nana is going to take a look. Tomorrow we get a webinar as well at Heikinashi. Tonight, I forgot when Nana's taking a look at. Oh yeah, supply and demand zone. Tomorrow we take a look at Heikinashi trading systems. And next week we have a new lineup again of webinars. So hope to see you there and then. And above all, great trading. Have a good day. Cheers. Oh, the name of the indicator is Keltner. It's called actually Admiral Keltner right here. Let's see, Admiral Keltner. There we go. It's Keltner. Keltner. Okay, so you can find that when you download the Supreme Edition from Admiral Markets. It'll be in this list when you click on the yellow folder, and then you can drag it onto the chart. All right, folks. Thanks for being here. Cheers.